I'm Christy Duffy for Smart Run News. BP's spill is now priced at $3.5 billion. Citigroup Research just putting out a report today that Anadarko CEO Jim Hackett is confident his company will not be liable for 25% of the cleanup. In your opinion, Philip Weiss joining me now from Argus Research, energy analyst. In your opinion, Phil, do the facts point to gross negligence on the part of BP, or should Anadarko share some of this burden?
I think gross negligence is really a tough thing to prove, and that Anadarko will have a tough time proving that. But under the nature of the terms of the operating agreement between BP and Anadarko, this is probably going to be decided in arbitration. So my suspicion is that the amount that Anadarko owes may be reduced, but I don't think it goes to zero.
All right, and what's your opinion at this point on BP shares? The liability of the spill is still growing. If you're an investor in BP's stock, what do? Do you sell and take the losses?
I lowered my rating on BP from buy to hold on April 30th because of the uncertainty around this situation. And I've kept my rating at hold since then, although I am more cautious. I did become more cautious along the way. And the reason that I've done that is because of the fact that the outcome of this liability is so unknown. It's really hard to put a number on what it might be. It's not something that I believe can be estimated. My is, though, that BP does survive. If you're taking a short-term approach to the market, I would stay away from BP because I think you're just speculating. It's too hard to figure out whether BP is going to go up or down or what's going to happen here. If you're taking a more long-term view, I would think about possibly looking at a total investment of BP over a number of months, and then I would kind of average into it over a period of time so that if things really go south, I can get out, and if things get a lot better, well, at least I got in some at the lower price. But I do think the company does survive, but I think caution is still warranted.
Okay, so you think they will survive, but do you think that once they do recover, will they ever return to their pre-disaster levels of revenue and production?
I'm not sure that the revenue and production is all that impacted right now. It really depends upon if, as an outcome from the spill, BP's operations are limited in such a way that it can't run its business the same as it did in terms of being able to generate barrels. I mean, right now, BP's generating about 4 million barrels of oil a day. If it was told that it had to exit the Gulf of Mexico, it would have a tough time replacing those barrels, and then I wouldn't expect its production to stay at these levels. But if it's allowed to stay in, even if somebody else serves as operator on those wells, I would think that the company's ability to grow production over the long term at about that 1% rate that it's forecast should remain intact.
Well, didn't CEO Tony Hayward say that no matter what, after this is, once the oil has been completely capped, they will never resume production on that rig?
On that particular well,
yeah.
I'm not so sure that I would take it that he said that. Whether or not they could get approval to do anything else is different, but I took what he said to mean that they would never use the well that caused this disaster to happen in the first place again. But that doesn't mean that if you got it under control, that they wouldn't necessarily want to try to get production from one of the relief wells or some other well. That's kind of how I read what he said. But even still, we don't know all the details around Macondo in terms of what the size of the resource is. There's still a lot of questions around how much it's delivering in terms of volume. But that's just, even if it's the 50 or 60,000 barrels that are at the high end of estimates, compared to 4 million barrels, it's a pretty small number. So I don't think that even if they lose well, it's not a huge thing to BP. It's more the costs associated with the spill that are really relevant to BP.
Okay, so where can you invest in oil right now?
When I look at the sector, the companies that I think of first, number one is Occidental. Occidental is one of the best managed companies in my coverage universe. It's got a very low cost structure, a really strong, solid management team. It has virtually no offshore exposure, just a small bit in the Middle East. It's in about 150 feet of water. It has no deep water assets, no U.S. offshore assets, so it's not really impacted by the moratorium. Strong balance sheet, good cost structure. It's a really good company. It's not trading at a huge discount, but it's trading at a discount, so it's an opportunity to me to pick up a really strong company at a good price.
All right.
I would also talk about Devon Energy, which actually had the good fortune to sell out of its Gulf of Mexico position, mostly to BP, prior to this spill, to focus on the onshore. Management's buying back a lot of stock because they think their stock is undervalued, and if you look at the price that you're paying for those reserves, it does look undervalued to me. They're also using some of that cash to help make the balance sheet stronger. And then a third company that I would look at would probably be ConocoPhillips, which is kind of a restructuring play. They're in the middle of selling some assets. They've started that process, gotten good prices for their assets that they're selling, and I think that ultimately that plan will work and that that's another good place to put some money today.
Okay, where is the oil industry going? What's the future? I mean, we just saw Exxon invest in XTO, which was a huge move and a signal towards alternative energy. Are the companies investing in alternative energy today, or the companies who solely do produce alternative energy, are those the most solid investments in the long term for the future?
One place I think that the industry is going is more and more the focus is moving towards natural gas. These companies have a difficult time accessing resources. 85% or more of the resources are in the control of national oil companies. So natural gas is a place that they can get some access to resources. There's lots of big LNG projects. Chevron has some in Australia. Exxon has some in the Middle East. Shell has some. BP has some. All the majors have a lot of natural gas exposure in the U.S. It's a big focus, especially among the independents. That's one way that I think you're seeing more of these companies going. I think over time you're going to see more and more of their production become natural gas versus oil. As far as other forms of alternative energy, all these companies have small investments of varying types in all other sources of alternative energy, but none of them have really gone into it in a big way. And I'm not sure that they will, but they do need to think, if you go out over the very long term, it is something more and more to think about because of the difficulty of accessing resources, that they are going to have to come up with something. But I'm probably talking 15, 20, 30 years out where it's really relevant. Production now is starting to fall a little bit, but I think that they'll also be okay for at least the next several years.
All right. Thank you so much, Phil, for taking the time to speak with us today. I'm Christy Duffy for Smart Trend News. For more on the energy sector, make sure to subscribe to our YouTube channel. That's Trade the Trend. You can also check our website, tradethetrend.com, for more headlines.